Alrighty, folks, we're going to talk about recession, the Fed, PCE, and of course, we will close with the market. Is it set up for another leg lower, or is buy the dip going to kick in? We're going to have this conversation Sunday morning with Mr. Dan Bird. How you doing, sir?
I'm doing well. Welcome back.
Thank you, thank you, thank you. Well, first, let me congratulate you publicly. Breakpoint Trading's YouTube channel is now over 1,000 subscribers. You did that in record time, and I'm just so proud of you. It just shows the value that you're bringing is real. So congratulations.
Thanks. And I think it's about 4.5 months since I started it.
Show off.
Um, but but I want to thank all of the subscribers because they're really the ones that are the ones that did it. I just come on and talk about stuff.
Yeah, stuff
And
you enjoy.
yeah, last week it was interesting. I had to do one really quick because I had to go to dinner with my wife. So it was only 13 minutes. And the comments were, I think it was pretty much split 50-50. Oh, I love the shorter ones. Oh, I really like the longer ones.
Welcome
So,
to my world.
so
Oh,
I'm
that's
gonna try to keep it between 20 and 30 from now on if I can.
yeah. I think if you stay sub 30, that's a good one because if you think about most people will plug in and listen to it on a drive home, listen to it at the gym.
Yeah,
So
yeah.
I think that makes a lot of sense. Well, let's
And I
roll
know
into. Go
and
ahead.
I know people are fast forwarding through it too.
Yeah, put it on 2x speed, all that.
Right.
Well, let's talk about topic number one. Again, we're going to do recession, Fed, PCE, market. Recession's topic number one. Obviously, we're hearing lots about recession talk. Jeff Gunlock actually came out and said there's greater than 50% chance. We've had consumer sentiment, consumer confidence plunge. We have threats of tariffs disrupting small businesses. We've got the government whacking expenses. It kind of feels like the recipe for a recession to me. I don't know about you.
And GDP. Talk about GDP now.
Yeah, GDP now, was it still negative? Right, it was down nearly 3%. I think it's like 1.5 negative now.
I think it's 2.1.
Okay,
I can look at it. It's in my newsletter this week,
okay, very cool.
which
Yeah,
we'll look at because I want to show you something from that. But yeah, if that happens, it'll be the first quarter, and two in a row is the definition of a recession.
yeah. So again,
So
it's really one of the things I love about this channel is we have receipts. In both you and I, right around January, we're saying the next 90 days to 6 months is going to be messy. Right, there's going to be a
well,
lot of
I was saying it last fall.
right,
I was
right.
saying it even before the election
That's true.
that recession would probably be in Q2.
Yeah. So you got to get another one of those nailed it T-shirts. You're gonna have like a whole wardrobe of those things.
Yeah, I'll show you. I mean, I have a little box on my website called the Recession Watch box, and I'll show you the three things that I've been tracking, which I showed back in September last year when the first rate cut started.
Yeah, we're
So
gonna roll this right into the Fed, but yeah, I think again, I'm not making a recession call at this point because I feel like I've missed twice already, and why would I take a third? But it certainly feels like the recipe is out there. The consumer scared, small business scared, government cutting.
yeah, it was. I had a conversation with a friend, and he said, everyone thought all of a sudden that inflation would go down and we'd start paying lower prices. What happened? I said, well, the prices went up because of inflation.
Hmm.
And inflation occurs because the government prints too much money. So inflation went up, but we can't come down from that unless we have deflation.
Hmm.
So, yeah, the rate of change is slowing,
Right.
but we're already up there. So the rate of
Yeah.
change that they talk about every month is just the rate that it's going to go up from here. For
Yeah.
it to
People
come
need
down, we
to.
need deflation, and deflation means recession, and then everybody will complain because we have a recession, but that's what they want,
Careful what you
right?
wish for is absolutely because yeah, a recession will bring likely deflation, but certainly more unemployment,
Yes.
and that's that could
And
be that could be significant.
that's the one of my three components that has not hit yet,
Not broke. Yeah.
right?
Well, let's jump into it. Let's peel apart your recession indicators. Show the website. Show what you've got because from there we're going to roll into the Fed because I think the Fed is staring stagflation in the face, and the
Could,
dot plot showed it. But let's close on recession first.
can you see my screen?
I can. Thank you.
So this is my website for anyone interested, breakpointtrading.net. And
Man,
my,
look at that market bias chart. Oh my goodness.
yes, yeah, I've been talking about, I show that every night when I do my channel, and my YouTube channel is right on the website. So anybody that's watching, if you're interested, just come to breakpointtrading.net and click on this little button. You can get to my YouTube channel. But this is where I start every night. I start here. And what I said the last few days, actually, I said when it started rolling over right there, has been extremely accurate.
Hmm.
So middle of February is when the whole sell-off started.
Yeah.
That's when that started rolling over and went down. You can see how rapidly it went down. But right now
Well,
it's just sort
that's
of,
a crash.
yeah,
That's a crash. Yes.
right now it's just kind of going sideways.
Okay.
And because of how it's made up, I'll click here on the market bias matrix and I'll show you all the pieces. So it's a combination of indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies.
Hmm.
And all of these on a short term, medium term, long term basis. And then all of that rolled up into a single number, which is what this chart is made of.
Right.
All right. So what this means is it is a percentage of these that are bullish.
Hmm.
So if this says on the short term says minus 22%,
Hmm.
that means only 22% of the ones in this column are bullish. You can see how much red there is.
Yeah. So it's 1 in 5, roughly.
Right. And same thing, it's pretty much the same on the medium term. Now, the long term, which takes a lot longer to start turning, is still, 78%. So it's got a lot of green still, but that takes a lot longer. But let me show you what needs to happen for this to start to turn back up again. So
Okay.
it can't really go down much more. There's not much left green in here
Hmm.
for it to go down too much. And some of these are counterintuitive anyway, like gold has been going up even as the market's been falling,
Yeah. Gold had
right?
hit a
So
record like 33,050 or something. Yeah.
right. So all of these can't turn red. I mean, that'd be
Right.
really, we'd probably end up being a depression or something if they all turned red.
Hmm.
But for these to turn green again, I'm just going to click on a couple of them and show you. In order for the short term to turn green, this pink line, the 5-day moving average, has to get above the 21-day up here.
Oh, so quite a move.
That's got a long way to go. And
Hmm.
you'll notice that on all of these. There's the NASDAQ, there's the Dow,
Hmm.
there's the NASDAQ 100, there's mid caps.
And these are
So
days, not weeks, right?
these are days. Yeah, these are days. But in order for this to start to turn up and start to go up like this or like this over here,
Hmm.
or go up like this came down, it's going to take a while for that
Hmm.
to happen.
Okay.
So my question is, are we on the verge of a rally, a short-term relief rally, which I think we will have,
Hmm.
or are we just going to continue to go lower? And even if we go lower, the only way that this can turn down too much more from here is if the long term starts to go lower too. If all of these start to turn bearish.
Yeah, that's the thing. That's how you get that to go lower. Is the long. It's
Right.
so bad for so long that turns.
Right. Exactly.
Okay, I got you.
So we shall see. I don't know, but once the long term starts turning bearish, when it gets that bad with that one's turning bearish, then it's about time that the short term starts to turn up.
Yeah, no, that if the long term goes red as well, that's again, this is the first time we're using this chart in this environment, but that might be the buying time.
Yeah, exactly. Yeah, it might be. I mean, I think a lot of people last week were buying the dip,
Yeah,
frankly.
that's interesting because I saw something. Again, I was doing a lot of reading while I was gone, so it may have been the week before, but I thought I read somewhere where $8 billion exited stock funds, which
Yeah,
was like a record for so many years. So it's like
right. But
retail is
look at
leaving. I don't know.
one of the components that I watch. Actually, it's on my bottom watch up here.
Hmm.
My bottom finder will look at the Nasdaq 100 because there's 100 stocks.
Hmm.
Um, Down here, a put call ratio.
Oh, interesting.
So the put call ratio is the difference between puts and calls. So if it's going up, that means there's more puts. That means there are more people are bearish if it's
Hmm.
going up. And when it hits bottoms, like here, this goes way up over 72. That's when bottoms get put in. But that hasn't happened.
Right.
So even as we have come down recently, right now we've just gone sideways for about a week. We came down through this period. Yeah, there were more puts, but not a lot more.
Yeah.
People are not
Nothing.
bearish enough.
Yeah. Okay.
So this tells me there's more to go. There's more room to the downside left.
Okay.
We have not put in a bottom yet.
Understood.
Same thing with the percentage of stocks above their 20, 50, and 200 day. You can see it came down to 10% right here
Mm-hmm.
briefly. This one, the 50 never came down to 20 like it has before. The
Okay.
200 never came down to 30. So it's starting to roll over again right now. So my question is are we going to get a rally, or was that it? Is this it? Are we going to continue lower from here? I don't know the answer to that.
Yeah. No.
I'll have
Yeah.
to
No
wait
one. No
next
one
week. It
does.
could be the Fed and PCE next week.
Yeah. We'll talk about PCE after the Fed, but yeah, it's going to be an interesting week, is what I hear you saying.
It'll be an interesting week. I mean, I think the market would like to have a relief rally just based on the number of calls that started being purchased last week. I mean, this thing is dropping like a rock. That means everyone's becoming more bullish
Mm.
when this is dropping. It means there's more calls being bought. So
Yeah.
it looks like everyone is expecting a relief rally. And as I've always said, when everyone expects the same thing, something different happens,
There you go. Well, let's
right?
switch gears from recession to the Fed. Obviously, Jerome Powell and his cronies, no cut, no raise expected. But the dot plot was pretty telling. Talked about inflation going up, unemployment going up more than expected, growth going down. Still two rate cuts, but now they have eight Fed presidents talking about zero or one cut. Uh, Anything market moving for you on? I think it was Wednesday.
It was exactly what I expected. In
Okay.
fact, it was basically a nothing burger.
All right.
The comment on the my YouTube that night was the Fed does nothing, and so does the market.
Nice.
So I mean, everyone expected that. It was
Okay.
pretty much came in just as expected. We'll look at here's my recession watch area right here. One of these is Fed rate hikes and recessions. So what you'll see is whenever the Fed cuts, and this is what I said back in
Yeah.
September of
Way
last
back when
year,
the first cut came. Yeah.
right here, the first cut in September, I said whenever the Fed cuts for the first time, about 6 to 9 months later, we have a recession.
So that was
Right?
September, right? So we're
That
talking
was in
March,
September was the first one, right?
March-ish.
So I was saying then it might be Q2, sometime in early Q2.
Yeah, March to
We
June.
could be in a recession. Now, it won't
Okay.
be official until we have 2 quarters of negative GDP, but that doesn't mean we can't already be in one,
Correct.
right?
Okay. Yep.
So that was one of the things. One of the things I said back in September before the election, by the way.
Yeah.
So a lot of people like to say because of what Trump's doing, that's what's causing the recession. But I've been saying it for a long time that this is going to happen.
Yeah, you were saying it that you pointed this chart out and I remember it right when they did the first cut. It's like, okay, recession watch time, 6 to 9
Right.
months.
Now, having said that, if you'll notice in the 90s, we had that happened twice and we had no recession.
Mm, true.
And that was during a secular bull market, which is what we're in now. So there's a possibility that there will be no recession. And I have always said, and again, we have receipts going all the way back to last year.
Hmm.
If we do get a recession this year, it will be short and shallow.
Yeah, short and shallow. Yeah, I like it.
So
Okay.
we shall see. So the other one is, of course, the inverted yield curve, which inverted back here in August, end of August, or uninverted, I mean. So usually when it uninverts, and
And
look
this
at
is
the
the
two,
2 and 10, just so I'm clear.
look at the two, and this is the 10 and 2 up here.
Or 10 and 2. Okay.
This one down here is the 2 and 3 month, which is
Yeah.
which is already, it was still inverted,
Yeah, still inverted. Okay.
right? So that's
Yep.
that's the zero line there for the 2 year minus the 3. So that one is inverted
Okay.
still. But if we go back and look at history over 40 years, whenever the yield uninverts, back here it was about a year and a half before the recession happened.
Okay.
This one here was about 9 months. This one was about 6 months. This one here was 5 months, and that was COVID. the
Mm,
pandemic, which nobody was expecting,
right.
and it only inverted for 1 month right there. But when it uninverts, that's when recessions happen. So we uninverted right here.
Yep.
So that was number 2 on my recession watch,
Okay.
the
And
uninversion
that
of the,
uninverted what, November?
that was in August last year.
Oh shoot, August. Okay.
Yeah. So, this one over here was a year and a half before the recession happened.
Okay.
And this one over here was a secular bull market
Mm.
during this one. So the only one that has not triggered of this recession watch is the unemployment rate. And you can see back here, this one started accelerating almost immediately when the recession started, which makes
Yeah, that
sense because
yeah.
the whole country was shut down. This one over here crossed right there. This is about that looks like about 9 months before the recession. This is about 6 months.
Okay.
This one here even though it crossed here, it hasn't been accelerating like these did.
Right.
So that's what I'm looking for. And it's actually been coming down lately. Went up
What's the
slightly.
latest read? Is it 4-1? Is that what I see on this chart?
4.1
Is
was the
that
last one. Yeah.
wow, I didn't realize we were so low. Okay.
So it's still below 4.5. And, if you, and 4.5, I'm not picking 4.5 as some magic number or anything. It's just, that's roughly about the midpoint, so back here in 2000, we were below that. Here in 2007, we were right at 4.5 when it accelerated.
Right.
We were well below it here in 2020 when it accelerated, and we're below it here. But if it starts to go up, and we're going to know this 2 weeks, a week from Friday will be the
Yep.
next one. And there will be
Sounds
two jobs numbers before the next Fed meeting.
Yep. Correct.
So if this really starts to go up here soon, like the next one, then that's going to cause some consternation on the Fed. And if it goes up twice and it gets over 4.5 by the next Fed meeting,
Mm.
then I think we could get a cut in May.
You think a May cut is possible? All right.
I think it's possible. I don't think they want to do that,
Right.
but I think it will be dependent on this. It would be dependent on the unemployment rate.
So I just want to put a pin on that so we can all watch this later. So right now we're sitting today at 4-1. We get two jobs numbers. What you're saying is if the jobs number comes in at 4, 5, or above in either of the next two readings, the Fed will be cutting in May. That's what you're thinking.
Yeah, or the two combined. So we could go from
Right.
4.1 to 4.3 and then 4.3 to 4.5.
We just get to 4, 5. Yeah.
If we see an acceleration
Okay.
of that reading, I think the Fed will cut in May.
Okay.
Um, Now I haven't looked at this, but let's look at the initial
Yeah,
claims.
claims have been bouncing around 420. There was 1 week where it popped, but
Yeah, so last time, the last report, it went up slightly from the month before, but not significantly. You can see just 1 week it popped up, but came right back down again.
yep.
And that's why I said the rate probably would go up, which it did, went to 4.1. Now the forecast was for it to be flat last
It
time.
was. You're right.
And I said it on my YouTube channel a couple of days before the report. I said I think it's going to go up to 4.1
Mm,
because of that pop right there.
yeah. Okay.
Now, so far this month, I mean, it's gone up a little bit,
Yeah.
but
Nothing.
a lot of the things that are going on with potential layoffs and that kind of thing really haven't happened significantly yet.
Right.
And the Fed even, Powell even said it, that there's haven't really been huge layoffs happening yet.
Mm-hmm.
So he said he's projecting 4.4 for the
End of
year.
year. Yeah.
For the year, right?
Okay.
So and he said that last year or
Well,
last
let me let
meeting.
me let me let me poke at that. Earlier, you said if we got to 4, 5 by May, they cut. Let's assume that we don't ever see 4, 5, and
Right?
Powell's right, and we're
Yeah,
4, 4 in December.
yeah.
Do you think there's
So
a cut in there?
no, I don't. So that's a good question. So that's one of the puzzle pieces. Another one is the CPI,
Mm-hmm.
and we'll get a CPI number in April,
Mm-hmm.
right?
Yep.
And here's the one that's dropping out of the base effect.
Okay.
So we've got a big one dropping out, just like we did last month.
Okay.
So if that happens, and you can see the rate went down last month,
Mm-hmm.
and if we look at commodities, Commodities are starting to go back up. Copper's spiking higher.
Screaming higher.
Now, interestingly, when copper goes higher, it means a strong economy.
Hmm.
So does that mean no recession? But food's gone up, the CRB has gone up, gasoline, oil, all of these have gone up. If these continue, we've got one more week left.
That's not good.
It's
That's
not
not
good.
good.
No. So it will basically cancel out the base effect.
Yeah, for sure. At least it could go the other way.
It could go the other way. Yeah, we could get actually a higher reading.
Yeah. Well,
So
let's switch gears from
the reading could bounce right back to 2.9.
It really could. Absolutely.
Based on all of this. And we'll look at this again next week after we have the one more full week in here. Good. But it's looking to me like it's continuing to go higher. And with the base effect, based on what happened, you see last month, see how it all went lower last month. And the base effect helped us last month. The base effect will help us again, but commodities are going higher. So we probably will have either flat or potentially back to 2.9.
Correct.
So a little spike higher. And then the next month, we've got a fairly big one dropping off. But then look what happens.
Yeah, then it gets dicey.
Then the summertime time frame is if we see those commodities continuing going up and we get this. Now this 1 month here was deflation.
Right, I remember.
So that month right there was deflation. This is going to have a negative effect on the 12-month window. And then inflation could get over 3%.
Yeah. Well, let's switch gears to PCE, right? PCE is going to be an interesting reading on Friday because, at least by the people I've read on, even though PPI and CPI this month were all positive, meaning better than expected, it appears that the inputs to PCE, not good. And they're actually forecasting PCE core to go up from the previous month.
Right. So, and it could. Yeah. It could. So I think the Fed was probably right in doing nothing this time. But they're going to have a real issue in May. If we get unemployment starting to move higher, they will want to cut. But if we get inflation moving higher too, they're going to want to hike.
No, this is what I keep telling people is coming. We're going to find out what is most important to this Fed.
Right. That's right.
Is it jobs or is it inflation?
Right. Or do they do nothing again?
I do not think that will be an option. They will have to do something.
Well, if they do nothing, trying to balance both sides of these equations, I mean, Powell could come out and say, yes, there are indications inflation is moving higher, but we said that was going to happen.
Can you believe, total sidetrack, total right turn out of nowhere? Can you believe he said transitory again?
Yeah.
I was shocked.
Well,
dude, get a better vocabulary. There's got to be a
well, he said it in trying to define. You have to put it in context with the whole.
Just the fact that he said it.
The whole comment.
Tariffs are transitory, right?
Well, that's right. He was saying it in relation to tariffs.
Correct.
And I have said all along that tariffs of them in and of themselves are not inflationary.
Okay.
Even though everybody wants to say they are not inflationary. And people want to even use Powell to say, oh, Powell said that tariffs are the reason that people are saying that inflation is going to be higher. That's not what he said. What he said was people are projecting the possibility of higher inflation and including tariffs in their analysis of that. But there is no proof, there is no evidence, that's what he said, there is no evidence that tariffs will cause inflation to go up. That's what he said.
Well, what matters to me is expectations, because consumer behaviors are driven by expectations.
That's true.
And right now, the average consumer doesn't watch our channel. They hear the headlines and they're reacting. Right. And most consumers right now think inflation is going to be higher, and they're blaming tariffs.
Right. So if the consumers pull back on spending as a result of that,
correct,
what happens?
Recession, no question.
Well, recession is part of it, but what else happens?
Likely deflation.
Deflation and prices go down.
Well, that's what deflation is. Yes.
Right. So
Yeah,
so you don't have inflation. So you don't get inflation.
it is possible. But again, back to an earlier comment, be careful what you wish for.
Yeah, that's right. Yeah, it will become you
It'll
know,
become a doom loop.
it'll become a self-sustaining.
Exactly. A loop.
So, and that's the balancing act that the Fed's going to have in the next one, May.
Yeah.
I think especially May. I think May is probably going to be a critical meeting for them.
Okay.
Which actually, let me bring up the monthly
That's
chart.
interesting because when I look at it, I was thinking June, which was the meeting.
Well, June could be if they do nothing in May. June, then June, all
That's
hell's going to break loose.
yeah, that's the one I
Right.
look at going, oh my God, this could be
Right. Because we've got this. So this will be April, May.
May,
These are CPI. April, May, and June is here.
June.
And then
Exactly.
July is negative.
Yeah, June, July. It could be
June and
wild.
July for sure. And
Yeah,
even
you think
August.
because again, what I see coming is rising unemployment, even if it's taking the stairs, meaning 4.1 to 4.2 to 4.3. By then
Right.
we're at 4.5 or 4.6. And oh, by the way, there's a very good chance that inflation looks ugly for 2 or 3 months.
Right.
That's a tough. That's stagflation. The
Yeah.
Fed's in a
So
tough spot.
so the Fed knows this too.
Of course,
The Fed sees this coming. So that's why I think they're going to cut in May. They're not going to wait
preemptive,
for June.
preemptive. Yeah.
June will be too late, and they know that.
Okay. All
So
right.
I think they will cut in May.
Do you agree with the Fed that there's two cuts in 2025? That's what the
I think that's what they would like, but
what do you think?
they might have to raise.
Oh, wait a second. I'm confused now. You just told me they're cutting in May, but then they're going to raise?
I said they will cut in May if the unemployment rate starts to spike higher.
Okay. All right.
All right, but if inflation is also going higher, then what are they going to do? Are they going to cut in May and then raise in June?
That would be a disaster.
Right. So they're going to be they're going to have a really tough spot for May
I agree. May is rough.
because all of the data, they say that they're data driven. Well, the rear view mirror data is going to say they should cut,
But
but
the
the
forward
data in the
leading
future,
indicator. Yeah.
the data in the future says they should be raising.
Yeah. And that's why I think it's all about June. That's why I think
Yeah.
it's a June crossroads. I think in June we figure out what does this Fed care about? Unemployment or inflation? That's what June is.
Yes, I agree with that for sure.
Okay.
Yeah,
All right. Well,
I think they thought that inflation was conquered,
no.
and now it's going to raise its ugly head. Now, in the towards the end of the year, it's
Yeah, it's
probably going
better,
to
but
start going down again.
too late. Too late. Too late.
But
Yeah.
through this period, and here's what I think what might happen with the market. We'll get to the market chart here in a second.
Yep.
But I think the market wants to rally in the short term
Correct. I can see that.
because it's so oversold right now. But
Mhm.
it will be nothing but a relief rally. So the market, I think, might rally. Doesn't mean it will, but it might rally in the short term, meaning April.
Okay.
All right, and I'll show you why in a second. But as we get into May and then especially into the summer months, then I think the market is going to have another leg lower and actually go lower than the previous low.
So take out the low. Okay.
Right. So
Well,
let's
let's
take
get
a
to the
look.
market. Yeah, let's close on this and do the final
So
market.
first off, this is let me move this up here. So this is an up-to-date chart, the one in the background. This is basically Dow theory. This little image down here.
Mm-hmm.
This is Dow theory that I came up with back in 1900, so 125 years ago.
Mm.
And he said this is how market cycles work. This is the process that markets go through. And the one behind it is our actual S&P right now. So you can pretty much map these next to each other, right? We're in the distribution phase, which I've talked about before. And I know you and I haven't talked for almost a month now,
Right.
right? But I was talking about this last time we talked.
No, I remember.
So so we're in this distribution phase right here, and then we came down, we broke through that 5850 level and came down. So that's this area right here. This is why I think we might get a relief rally. We got a little bit of one, but I'm kind of expecting it to get at least get back up to the 200 day. Oops.
Okay.
Right here.
I see it.
And maybe back up to the support line, which is now resistance at 5850, but it might not get there.
Yeah.
So, and then we have another leg down. Lower than this one right here. Okay.
Yep.
So now let's look at first I'm going to show April 1st. Then I want to go back to March. Okay. So this is from Stock Traders Almanac. This is historical performance 21 years, 21-year performance. The dash lines are
April generally up.
Generally up. That's right. And notice how it rolls over right at the end as we go into May. Remember, sell in May and go away.
Yep.
So everything that we've talked about now indicates that the summer is going to be really not a good time to be in the market. Not a good time. Okay. All right. The dash lines are post-election years, which is what we're in. This goes back 75 years, but they're kind of mapping next to each other for the most part.
It's similar, yeah.
All right. So April in general looks like the beginning first week is kind of sideways and then it starts going up. So this might be our relief rally until we get to the summertime months.
Makes sense.
And then we start going lower. So for the May one, what I want to do is actually show you my newsletter because I put this in the newsletter. So for anybody that's interested, just come to breakpointtrading.net and click on this little box right here. And the newsletter pops up. I put St. Patrick's Day cartoons in there. So nice. And let me just go down here to the chart I want to show you. So this is March. So this is the month of March. The one on the top is from Stock Traders Almanac. 21 years is the dark lines. The dash lines are 75 years post-election. Only the post-election years over 75 years.
Got it.
So it's probably about 18 or 19 years worth that make up those lines.
Yeah, divide by 4. Yeah.
Right. But the solid one is 21 years. All right. And then what I did was I created a chart of the S&P, the NASDAQ, and the Russell 2000 of what they have actually done so far this month. And you can see the "You Are Here" image right there. I'll make this bigger in a second, but I want to show you both side by side. All right, so this is Monday. This is when the market opens on Monday. And you see what happens historically the last week of March.
A little relief.
And I just showed you April. First week kind of goes sideways, and then it continues to go up. And you can see where we are right now, which looks kind of similar to what the historical trend has been.
Yeah, generally. Yeah.
Right?
Okay.
So that would suggest that we may get that relief rally as we move into next week, the last week of March.
Okay.
It does not mean that we will get it. It does not mean that we have to get it. It just means that historically suggests that might happen. And we will see next week. And I'll be watching this on my YouTube channel every night after the market closes.
Yeah. Again, Mr. Dan Bird at Breakpoint Trading does daily market recaps most days, Monday through Friday. And then he and I speak every Sunday. So you got 6 days a week of Mr. Dan Bird.
Yeah, it's true. Could be getting tired of me.
Yeah, I doubt it.
All right. So that's what I'm watching. The VIX is really interesting as well.
There's 2 things I wanted to look at if we're done talking about the market, or when you're done with that, there's 2 specific things I want to look at with you.
Sure.
You're ready.
I just want to show the VIX real quick. The VIX I showed last week was just the market going sideways. But as the market went sideways, in fact, all the way back here, the VIX has been steadily going lower. So it's now below 20, which is for me, the demarcation between bulls and bears. It's in the neutral zone right now. Okay. So it's implying that the market is not overly concerned with it going down in the near term, meaning the next 30 days. That's what the VIX measures, the next 30 days.
Okay.
So,
Very cool. Well, I
all right.
wanted to look at two things. First is gold. Let's give the gold the folks that are watching
Oh,
gold
interesting. You
their
should
love.
say that because I just updated a gold chart on
Yeah,
my website
3,000 bucks
right
plus.
here. There's gold. 3,000. The high was 3,056,
Yeah, good for them.
closed at 30.20.
Yeah,
So
over
this goes
3,000.
back all the way to 2006. So
It's an impressive run.
it actually starts in July of 2006. So you can see what it's done in that
Yeah. Any
period.
any thoughts on why gold is ripping? Is this people running out of the dollar, running out of stocks? Is this a worldwide
Um,
accumulation?
I
Any
think
thoughts?
there's a few reasons. One is just a flight to safety.
Mhm.
So it might imply that everybody thinks the market is going to go down. But I saw a chart, and I don't think I have a copy of it, but it showed that in January of this year, the the inflows of gold into the U.S. tripled,
Hmm.
tripled.
Wow. Okay.
So countries all around the world are buying gold, but they're sending it here because gold here is more expensive than it is in other countries.
Oh, and they're
So,
probably
so
getting
they're buying it.
currency.
So they're buying it cheaper. So it's an arbitrage play.
Yeah, arbitrage.
So
Yeah.
they're buying gold cheaper and they're sending it to the U.S.
All right, that makes sense. Well, let's do the second thing. I did something on Friday morning at the Open that I swore I would never do.
Uh-oh.
I bought,
Time for everyone to sell.
yeah, exactly. I bought Tesla.
That is too funny.
I bought
That is
Tesla.
very
I
ironic.
hated seeing all these people light Teslas on fire. And again, I hate Elon Musk. I think he's a dick. But I'm like, this is crazy what people are doing.
Yeah, you know what this is just I probably shouldn't even say this, but just an observation.
Yeah.
People are setting Teslas on fire for whatever the reason. I don't really understand what the
I
reason
don't get it.
is for this. I don't get it at all. They're setting maybe because I don't know, they hate Trump. Is that why they
No,
hate?
this is, well, I don't know. I can't
You
explain
know,
crazy
they're
people,
setting
but
Teslas on fire. So what they're doing potentially is setting liberal Democrats' cars on fire that wanted to save the planet. And these people might actually be creating new MAGA voters
I don't know what they're doing. It's just,
as a result.
it's,
It,
I've seen this a couple of like Chipotle when they had their E. coli scare or whatever that I don't know if it was E. coli, but they had some scare years ago, and it
right.
just had all this negative press. I jumped on Chipotle back in the day. I
Yep.
just see all this crazy, and again, I said I would never buy it. It's a cult stock, yada yada yada. But I just got so irritated, and I did it. It's just so irritated with people lighting them on fire, and keying swastikas in the hoods of people's cars, personal property. It's
Right.
just like,
I
what
know.
are you
Yeah,
freaking idiots doing?
they're doxing people that own Teslas.
I'm like, come
So
on.
here's all the addresses where the Teslas are. Go throw
That's just
Molotov cocktails at them.
so I
But
so
again, like
I
I
bought
say,
Tesla.
they're doing this to people that were
I know,
basically
it's nuts.
Liberal Democrats that wanted to buy electric cars.
Well, then you got that. What is he? The governor of Minnesota or Wisconsin, Timmy something?
Waltz,
Yeah,
he was the
yeah,
running mate of
yeah,
Harris.
yeah. Timmy talking about he's happy that it's going down. I'm like, once I saw
Right.
Timmy's video, I'm like, screw it. I'm gonna go buy some stock. It's crazy.
All right. So I'm going to show you just two of these, but the last one is Tesla. But this is something that I I did this I think on Friday's video, and I'm actually going to do this Monday. So when I do the video on Monday, it's going to be similar to this. Let's see which one. AMD. So we'll start with AMD. This is using a short-term technique for selling puts.
Okay.
All right. So it's options. So when you sell a put, it's a bullish move. It's a short term, meaning 1 week. So these are actual trades. So this is on the 17th, which is Monday. I sold a put at $98 with the strike price. If it does not go below 98, then that means I keep 100% of the
Yep.
premium. So it's like being the insurance company
Correct.
where people pay you a premium for insurance. And if your house
Mhm.
never burns down, then they just keep the premium,
Yep.
right? It's exactly the same.
That's the game. Yep.
That's exactly the same game. So I'm selling a put. I get a premium for selling it. If it doesn't go below 98, if it does, my house doesn't burn down, then I keep the premium.
Yep.
And that's what
Makes
happened.
total sense.
100% gain. Okay.
Okay.
Now, coincidentally, on Friday, I did the same thing with Tesla.
Oh, shut up. That's funny.
So because I noticed the candle, so it's got a very bullish candle and it closed at the high of the day. So maybe this was you. Maybe you're the one that did this.
Well, I bought at the open, but yeah,
Well, whatever, but it kept going up the whole day.
it did.
All day
Yeah,
it was going up.
I think I bought it like 234 or something.
Yeah, so my strike price is 230.
There you go.
So as long as it stays above 230 by next Friday, the 21st, then I keep all the premium. I make 100% gain on it.
There you go.
So you and I are thinking the same way. I was thinking the same thing. It's, this is just selling off too far. Now, it doesn't mean it's going to go back to the highs or scream
Oh,
higher.
not at all.
It's got a lot of overhead resistance it has to get through, the 21, the 200 right there, the 50 up here. But it could easily get to the 200, which is at 285 roughly.
Yeah. My purchase was more of a middle finger to Timmy. I was like, why are you voting against an American company, you freaking
Right.
idiot?
Mine wasn't. Mine was just to make money.
Yeah. Well, at least you're honest.
But that's really funny that you should say that because that's pretty much what I did Friday too.
Friday morning. It's crazy. Well,
So we'll see. And
Bird,
this whole strategy, by the way, it's basically a 1 week strategy. I am going to do my YouTube video. My YouTube channel is called the Daily Scan. Nice. So I'm going to do a daily scan on Monday. I'm going to identify.
Hold on.
Yeah.
I want to make sure we don't confuse people. You just said your YouTube channel is called Daily Scan. That's not correct.
Well, it's called Breakpoint Trading.
Yeah, you got to be very careful because people will go search for Daily Scan and not find you.
Yeah, I wonder if they would find it though.
Good question. No idea. Let's correctly name the channel.
That's a very good point. I'll actually show you the channel. But every day at the top it says the Daily Scan.
Yeah, but the channel is called.
But it is Breakpoint Trading is the channel.
There you go.
Perfect. So, but you can get to it from the website very easily. But I call it the Daily Scan because I actually create a scan and I run a scan and I say, here's potential stocks that you could buy. And I'm going to do this with this short-term strategy on Monday and run a scan for, why I'm looking for these kind of stocks.
Perfect.
And I'll show you the list and I'll tell you which ones I think look the best. And I might actually do one of them if I think that we're heading into a rally. Just like I did with AMD. And the scan basically is looking for something that's moving up, that's closing above the 21 days. The day before it was below the 21. That day it's above the 21. So that usually means it's going to get a short-term rally, at least for a week. And I'm just trying to capture 100% gain.
Yeah, this is going to be a lot of fun. This is why you got to tune in to Breakpoint Trading because he does these daily scans Monday through Friday. There you go, folks. We talked recession. We talked Fed. We talked PCE and closed with the market. Dan, you're amazing, buddy. Take care.
All right. Have a great weekend. Welcome back.
Thanks. Thank you, buddy.
Take care.